Good day, we are from Group 3 and this is the topic that we are going to discuss, MFRS 110 events after the reporting periods. Here is our group members.
Good morning, Doctor. I'm Yingwen and my metric number is 291497. First, I would like to present the summary of MFRS 110 event after the reporting period. The Malaysian Financial Reporting Standard, which is MFRS 110, event after the reporting period, provide guideline on how entities should handle the event that happened between the end of the reporting period and the date when financial statements are authorized for issue. After that, it highlights the regulatory, positive, and behavior theory of accounting that apply to the MFRS. Entity must know how the difference between the subsequent event refer to the adjusting, which is provide further evidence of condition exists at the reporting date, and non-adjusting refer to the indicative of condition arising after the reporting period. Adjusting event also impact to the financial statement, while the non-adjusting event do not require adjustment but need to disclosure. MFRS 110 emphasize the importance of assessing whether an entity can continue on going concerns or not. If the management determine after reporting period that the entity intends to liquidate or to cease the trading, then the financial statement should not to prepare on a going concerns basis. The conceptual framework for the MFRS 110, which is event after reporting period, and the recommendation for figuring out if a company is still in operation to make this theory essential. Examining matters like the entity financial standing, liquidity, and the potential resources available are all the part of this. Determine the appropriate degree of the disclosure for going concerns issue is another task to make the easily by accounting theory. Besides that, the standard identify the principal participant. It also discussed the MFRS 110, the nature selection, offering advice and principle. To changing the condition, professional judgment in application, and the flexibility as well as the judgment. The provision of MFRS 110 limitation, such as the subjective assessment process and its unclear disclosure requirement, highlight the standard drawbacks and challenges when implement the particular situation.
Good day, Doctor. I'm Kavita Devi, daughter of Appal Naidu, and my metric number is 291528. Now I will continue the presentation for accounting theory approach. The first theory will be positive theory. Positive theory is critical in understanding the practical reasons behind accounting practices such as those outlined in MFRS 110. This standard pertains to the treatment of events occurring after the reporting period and before the financial statements approval. Companies may choose to disclose these events based on their financial health, market dynamics, or regulatory needs with financial talents. Firms often aiming to manage transparency. Positive theory also sheds light on how external factors like economic shifts and financial crisis influence the evaluation of standards, which ensuring that MFRS 110 delivers accurate and reliable representation of entities' financial position. Next, I will explain the impact of behavioral accounting principles, particularly in the context of MFRS 110, which deals with post-reporting events. Understanding these dynamics helps stakeholders interpret how human behavior affects financial decision making. One key concept is anchoring bias, where users overly rely on the first information available, potentially leading to misinterpretations of financial data. This bias can cause significant issues such as ignoring post-reporting changes, skewing valuations, and fostering unrealistic optimization in investment decision. By recognizing this bias, users can make more accurate and informed financial assessments. The last theory is regulatory theory. Regulatory theory explains how entities such as governments and non-government organizations shape accounting standards. In Malaysia, MFRS 110 illustrates this concept as it reflects MASP's rules in ensuring relevant and high-quality financial reporting. The standards guidelines on recognizing post-reporting period events aim to safeguard investor interest and enhance the reliability of financial reports. Globally, MFRS 110's credibility is reinforced by the support of the IASB, which showcasing the essential social institutional recognition needed for effective regulation and standardization. That's all from me. Thank you.
Doctor, I am Sankri Subramaniam, metric number 291537. Today I will discuss the main parties involved in establishing accounting standards like MFRS 110 events after reporting period. These standards are crucial for consistent, reliable and transparent financial reporting. I will outline the key players involved, their roles and their impact on ensuring financial stability. Let's see. First critical players are the accounting standard setting boards such as the Malaysian Accounting Standards Boards MASB and the International Accounting Standards Boards IASB. These boards are responsible for formulating rules that ensure consistency in financial reporting worldwide. Their objectives include addressing stakeholder needs by providing clear guidelines, improving transparency and comparability in financial statements, enhancing market confidence by aligning standards with evolving financial sector trends. Through their work, businesses and investors gain a reliable framework for decision making, fostering trust and stability. We have professional accounting organizations like the Malaysian Institute of Accountants MIA and the Association of Chartered Certified Accountants ACCA. These organizations contribute expert input during the development of standards and ensure compliance with industry practices. Their roles include providing forums for discussion and consultation with businesses and professionals, ensuring that the standards are practical and aligned with industry needs. This collaboration bridges the gap between technical regulations and real-world application, ensuring that the standards remain relevant and user-friendly. Lastly, industry experts and stakeholders play an important role. They validate the standards' relevance and enforceability by offering insights from their specialized fields. Their contributions ensure the credibility and accuracy of the standards, practical application of the rules in diverse industries, enhance financial stability by promoting uniform practices across sectors. This stakeholder collaboration ensures that the standards are not only theoretically robust but also practically viable for businesses.
Hi, my name is Vanita Epike Lachmanan and my metric number is 291509. I am going to discuss about the nature of MFRS 110. MFRS 110 is a principle-based accounting standard that guides how businesses handle events that occur after the reporting period. The first one I'm going to talk about is guidance and principle. MFRS 110 emphasizes general principles rather than strict rules. It encourages professional judgment in deciding which events should be reported and how, focusing on events that could significantly impact the financial position of an organization. The second one is flexibility and professional judgment. The standard allows flexibility, enabling accountants and auditors to use their professional judgment to determine the significance of events. This approach accommodates diverse business environments and avoids rigid rules, making financial reporting adaptable. The next one is adaptability to changing circumstances. Since it's impossible to predict all future events, MFRS 110 is designed to handle unforeseen situations effectively. Its principle-based approach ensures businesses can adapt to dynamic circumstances, focusing on the substance of events rather than strict guidelines. The fourth one is professional judgment in application. The standard emphasizes evaluating the materiality and relevance of post-reporting events. This requires professionals to use their judgment to apply appropriate principles based on each organization's unique situation rather than following a one-size-fits-all rulebook. The last one, the fifth one, is principle-oriented. MFRS 110 avoids overly prescriptive language, encouraging a contextual approach to financial reporting. This enables entities to apply the standard in a way that aligns with their specific circumstances, making it more practical and relevant. In overall, we can see that MFRS 110 is a flexible and adaptable framework that relies on principles rather than rigid rules. It empowers businesses to use professional judgment to handle events after the reporting period. This principle-based approach ensures relevance, versatility, and responsiveness to unique circumstances.
Limitations of MFRS 110. Events after the reporting periods are classified into adjusting events and non-adjusting events. Adjusting events reflect conditions existing as all of the reporting periods end. There are four assessments activity. The first is impact on financial performance. Adjusting events can significantly influence a company's assets, liability, revenue, and expenses. So, these elements are crucial for investors making comparisons and informed decisions. The second is risk of fraudulent activities. The subjective nature of classifications open the door to manipulations by management. Management may misclassify significant economic events such as losses as non-adjusting to protect reported profitability. So, clear guidelines are necessary to prevent manipulations and ensure reliable financial statements. The third is global consistency in interpretations. Consistent interpretations of events globally is essential to prevent different treatment. So, inconsistent treatment of similar events undermines the comparability and transparency of financial statements. And the last one is importance of uniformity. Uniformity in applying MFRS 110 ensures accurate and reliable financial information. This supports fair comparison and enhances trust among users of financial statements. Insufficient clarity in disclosure guidelines. Ambiguity in MFRS 110 disclosure. Extra guidelines lead to varying interpretations and inconsistent disclosure practices. Inconsistent reporting practices. Inconsistencies hinder comparability and transparency of financial statements. The impact on stakeholder confidence. Lack of standardization fosters skepticism among stakeholders. Confidence in the accuracy and dependability of financial reporting diminishes. Challenges in identifying events without precise guidelines distinguishing between material adjusting and non-adjusting events becomes challenging. Broad criteria and varied interpretations. Broad criteria allow for subjective interpretation leading to inconsistent practices across organizations. Erosions of financial reporting effectiveness. The reporting framework fails as a communication loss due to insufficient clarity and standardization. Call for precise guidelines. The need for more specific standardized disclosure requirement to ensure consistency, comparability, and transparency.
After that, I will proceed the suggestion to overcome the limitation of MFRS 110 even after the reporting period. So the first suggestion is establish of a clear guidelines to address the subjective in assessing adjustment and non-adjustment. Provide a standardized framework with the clear guidelines is essential. This involves the setting materiality threshold to determine if an event significantly impacts asset, liability, revenue, or expenses to allow consistent classification and adjusting or non-adjusting event. For example, event assisting a specific percentage of asset or revenue could be classified automatically and adjusting event. In addition, a clear criteria for event timing and financial impact should be established. Event directly try to assist conditions such as contractual obligation or regulatory ruling should be meet defined financial obligation and legal criteria for classification. Furthermore, standardized documentation requirements should be enforced, requiring details record of the decision-making process. The event description and the rationale for classification also needed. Transparent documentation enhance verification by auditor and regulator. Last but not least, it should provide the training for accounting professionals to ensure the consistent application of this standard. Training should be emphasized the accurate classification, case-based training, and the long-term benefits of transparent reporting to the stakeholder. The second suggestion is refer to the developing comprehensive illustrative example. The Malaysian Accounting Standard Board, which is MASB, could address the lack of the specificity in MFRS 110 by providing detailed practical example to guide the entity in apply the criteria for adjusting and non-adjusting event. This example should span various industry and scenarios such as natural disaster, economic recession, legal dispute, regulatory changes, and geopolitical conflicts, allow the firm or entity to better classify the post-reporting period event. To ensure the relevance, MASB could partner with the stakeholder like auditor, financial analysis, and industry professional during the development, incorporating insight from the real-life challenges, and this example could be included as an guidance note rather than within the main body of the standard to maintain the MFRS simplicity while providing practical direction. And each example should be include a step-by-step explanation of the decision-making process to address the timing, materiality, and also financial impact. The guidance should also tackle the subjective judgment or borderline the cases, offering the restoration. Additionally, the firm should document the rationale for their classification to enhance the transparency and also accountability in financial reporting.